Carl White and the Marketing Animals would like you to know that they have a Loan Officer Freedom podcast available for you. It's not the Loan Officer Incarceration podcast. It's not the Loan Officer Infirmed podcast. It is the Loan Officer Freedom podcast, and freedom is free. That's right. Learn from the best loan officers and professionals out there in the mortgage space to help you with your business. All you have to do to get this free Freedom podcast is click this banner right over there. I thought this was interesting. At NAR's mid-year conference just recently, they approved a 29% increase to the special assessment. It goes from $35 to $45 per agent starting in 2023, then extending their campaign for another 5 years rather than the usual 3-year renewal. So nice of them, don't you think? The assessment is in addition to NAR's membership dues, which the board voted Friday to keep at $150 for 2023. Also very kind of them. And now some NAR members, according to Enman, are asking, is this whole thing worth it? Well, at $195 collective per year with 1.5 million members, it means NAR is pulling down in dues alone $292,500,000 annually. Then let's remember they did sell off Realtor.com to News Corp. That would be Rupert Murdoch's group over at Fox News for $950 million and completely relinquished the title Realtor of Realtor.com. They don't even have somebody on the board over there right now to make sure that they're ensuring that your namesake Realtor in the Realtor.com is being taken care of. Now, of course, they're making money by selling agents' designations, which by and large mean very little, if anything. And let's not forget the money made from all their conferences. That stuff ain't cheap. Okay, so maybe over the past 10 years, NAR is pulling down, I don't know, about $500 million per year. Well, I ask you, with those pay raises, and is it worth it? I would ask, one, what's their overhead? It seems to not be that much. And two, honestly, what are they actually doing for you that's worth $500 million a year? Now, as I said a moment ago, I can tell you they're certainly not protecting your profession or your title as a realtor because, as I said, they sold that downriver. So for me personally, I'd say, just quit NAR tomorrow and simply label them for what I see them to be, profiteers and a for-profit company making money off the backs of agents while doing very little to protect their image or their profession. The question is, are you this or are you that? I love this story. Cape Hatteras National Seashore has confirmed that this unoccupied house located at 24265 Ocean Drive, Roddenth, North Carolina, collapsed this afternoon and went out into the sea. Now, this is the second unoccupied house that collapsed and went into the ocean. I don't know if you know this, but according to Zillow, this house is currently worth $381,200. Now, I wonder if Zillow made any adjustments to that price because one, the house is no longer on stilts, so there has to be a price adjustment for that. And two, the house is now currently in a flood zone as it sits 375 feet below sea level. What do you think? Did Zillow make the adjustments? I doubt it. Congratulations to United Wholesale Mortgage and their Q1 profits. They're up 89% despite lower productions. So how do we increase profits while having lower productions? One might wonder how this happens. Well, it seems to be pretty simple. According to Housing Wire, the nation's largest wholesale lender, United Wholesale Mortgage or UWM, in the first quarter of 2022 posted an increase in margin and profits over the prior quarter, increasing its purchase volume to record levels. That makes sense. If you're going to send your business to one company and one company alone, no matter what, if I was them, I would charge more too. It's a pretty good gig for United Wholesale Mortgage. On the flip side, and as is the case with virtually every other lender in the country, California-based Owning Corp, a direct-to-consumer mortgage lender acquired by Guarantee Rate in February of 2021, is planning a workforce reduction amid higher mortgage rates and lower refinance volume, and of course, lower margins. Now, if you are a loan officer or an owner of an independent mortgage bank and you're concerned about margins, let me help you out here for a second. Non-QM, pretty good margins there. Agency loans, not so much. Refinances, rate and term, no margins whatsoever. There's not a margin if there's not a deal on the table. Remember, 80% of zero is zero, as is the case with 90% and 100% of zero. Now, that's some mortgage production math right there for you, so act accordingly. And finally, and man, is this a big one, and it affects every non-depository broker and independent mortgage banker in the country. The CFPB plans to use additional authority to supervise non-depositories, which poses risks to consumers, according to the CFPB. The CFPB recently announced that it will begin expanding its supervisory examinations to additional non-bank financial companies. In addition to supervising consumer complaints with respect to large depository institutions, the CFPB has already been supervising and examining certain categories of non-bank financial institutions, including mortgage companies, private student loan companies, and payday lenders. In addition to that authority, the CFPB also has the ability under 12 USC, not the football team, 5514, to make an administrative finding that a particular covered person, that would be you guys, is engaged or has engaged in conduct that poses risks to consumers with regard to the offering of provisions of consumer financial products and services. This would be you. You have to understand this. The CFPB is very actively and aggressively pursuing non-depositories, as you guys control over 70% of the industry. As a mortgage broker or as an independent mortgage bank, just be careful to dot your I's and cross your T's, because they are going to make an example of somebody. So let's just make sure that it's not you or your company. Hope this helps out, and I can't wait to see you guys. Until tomorrow, ciao.